I think that as ecosystem services deteriorate, companies will experience supply and production losses if they don't adapt their practices. One industry that has a lot of dependencies is obviously agriculture, dependencies on biodiversity, but there are others in staples, beverages, energy sectors as well. So production and supply are going to be a key part of evaluating biodiversity loss.
Welcome to WellSaid, discussions with investors from across Wellington management about market and geopolitical cross-currents and the long-term research required to make sense of them. I'm your host, Thomas Mucha. According to a 2020 report from the World Economic Forum, 50% of global GDP, that's up to $44 trillion, is moderately or highly dependent on nature. But despite this tremendous value, data shows that biodiversity loss and ecosystem degradation are accelerating. Now, like climate change, the world has been slow to address this problem. There is some momentum now from policymakers and market participants, but probably not enough. So here to talk about biodiversity loss, the parallels with climate change, and Wellington's ongoing initiative with Woodwell Climate Research Center are Chris Goolgasian, Wellington's Director of Climate Research and Portfolio Manager, and Zach Zobel, Climate Scientist at Woodwell Climate Research Center. Chris, Zach, thanks for joining me today on WellSaid.
Great to be here, my friend.
Happy to be here.
So Zach, 44 trillion, that's a massive amount of economic value. So from your perspective, what are the benefits of healthy ecosystems and why is diversity so important?
Thanks, Thomas. 44 trillion is a number that you often see. Reports have tried to quantify biodiversity, but in reality, the price of biodiversity is all of it. It's all capital. Everything depends on strong biodiversity. Biodiversity plays a key role in almost every aspect of our lives, whether it's our health, our food, even the stability of our atmosphere. It's like having a diversified portfolio in finance. The more diverse it is, the less risk you have of that ecosystem falling apart.
So Chris, as Zach just pointed out, biodiversity, super important, affects a lot of things. So from your investment perspective, what do you see as the main causes of biodiversity loss? I mean, how do you think about this from a PM perspective?
Yeah, the science is pretty clear, and Woodwell has educated us on this, but the history and the future are going to be much different. So the history is that about 50% of biodiversity loss comes from land use. So if you had a pie chart of the loss, half of that pie is land use historically.
Because we're changing the way we use land?
Exactly. You think about farming and housing and commercial and industrial practice, on and on and on. But the future estimates from the science world are that by about 2050, climate change is going to overtake land use as the biggest impact on biodiversity loss. So this is an area where the future is going to be different than the past, and climate change is actually going to be the biggest problem going forward.
So this is going to get worse, not better.
Yes.
All right, well, let's dig into those connections between climate change and biodiversity. It strikes me that the momentum to address the former may inform action on the latter, so let's dig in. Zach, from your perspective, how are climate and biodiversity related from a scientific perspective?
In some sense, climate, not just climate change, the climate of the localized area determines what type of biodiversity or what type of ecosystem can be present there. It's hard to recover biodiversity without understanding the native species of that climate. In terms of climate change, biodiversity-rich areas tend to absorb a lot more carbon. They tend to take a lot more carbon out of the atmosphere. So even strong biodiversity can help us mitigate and even adapt to climate change, but it's particularly important on the mitigation side.
So there's a causal relation between biodiversity loss and climate change?
It's a feedback loop almost. As biodiversity loss continues to accelerate, as it continues to grow, that is taking one of our important carbon buffers away, or it's diminishing it at least, and that's further feedbacking on making climate change worse.
Chris, now from your perspective, what parallels do you see between climate change and biodiversity loss?
Yeah, I think there's a pretty good playbook from how far climate change has come into the private markets and where biodiversity probably goes. The playbook has roughly 3 steps. So the first one is you have to have a framework that's credible that people basically agree with and then can be deployed in both disclosure and operations. So for climate, that framework is the TCFD, the Task Force for Climate-Related Financial Disclosures. For biodiversity, that framework is the TNFD, the Task Force on Nature-Related Financial Disclosures.
We need to keep the alphabet soups straight there.
We do, a lot of letters in there, and the TNFD will be basically formalized by the end of 2023. And so that's the step one in the playbook. Step two in the playbook is that you will need tools and software for asset managers and asset owners to analyze and evaluate biodiversity risks at the security and portfolio level, essentially to then comply with step one. And then step three in the playbook is you'll see regulatory action that basically adopts some of the framework. So that's where we are in the climate world today. Throughout the world, there are a lot of regulations and rules in place that basically replicate and look like what the TCFD recommended. I think somewhere down the road you will see a similar parallel for TNFD, where regulations start to adopt what TNFD said.
So I've noticed in my discussions with clients, with investors, that there's a growing awareness of climate change and what's important. Are you sensing that in biodiversity as well?
Yes, I think biodiversity is probably the hottest topic within a very hot topic, excuse the pun on hot and climate, but biodiversity in our firm and with our clients has probably been one of the top requested content meetings this year and back half of last year. We recognize the importance of it with Woodwell. We actually have our annual 2023 research agenda on the science side is filled with biodiversity topics. We also tackled a handful of topics last year. So it is of high interest on the client and asset owner side.
Well, Zach, Chris just name dropped you there. So the start of this chain is science. So how does Woodwell specifically advance awareness and action on biodiversity?
Woodwell is a climate change think tank, and we work in a lot of different ecosystems, environments, but fundamentally almost everything we do centers around biodiversity. I've already talked about how climate change and biodiversity are naturally intertwined, and I really think working with Wellington has probably been our best example of how we advance the understanding of biodiversity. We've been working with Wellington for 5 years now. Through our partnership, I think we've developed a common vocabulary that oftentimes is lacking in a lot of the scientific research that you may see published online. We actually understand better how asset managers or decision makers think about biodiversity. And I don't want to put words in Chris's mouth, but I think they understand biodiversity a lot more than when we started working with them 5 years ago. It's developing that common vocabulary, and that's how we in particular have pushed the science through.
And just to add to what Zach said, the word we use is translation, right? We're each trying to translate what the other means. So that's the constant back and forth that really brings out the magic.
Yeah, and I'll just say from my own perspective, my national security, my geopolitical research is informed every day by particularly the climate science that's coming out of Woodwell. It's really integrated into my research process, and it's been very impactful in getting me to understand these issues more clearly. Now, Chris, you mentioned the importance of having a process in incorporating biodiversity issues here. What are some of the main hurdles that you're seeing to integrating these biodiversity insights into that process, and how do you try to get over those hurdles?
I think one of the key hurdles is pretty clear today, which is the lack of a common measure for biodiversity. Investors live on metrics, PE ratio, tracking risk, beta, et cetera. And even in climate, we now have measures. We have a net zero framework. Companies can be measured on their net zero goals. We don't have anything similar in biodiversity in economic or financial terms.
Yet.
I think we will. The challenge today is that the leader in the clubhouse is a scientific term, and Zach is far more educated on this than I am, called mean species abundance, which attempts to measure the diversity of species in an area of land. And I just don't think that it's going to translate well into financial terms. It is in a number of vendor tools already. It's starting to get attention, but I'm not sure it's the one that's really going to take off. And so I have theorized of a concept, and I'm happy to put it out in the ether today if any energetic listener wants to take it on. And that concept is called cost of nature sold, CONS. That would be the equivalent of what investors are used to, which is cost of goods sold on the income statement. And the idea is that we could have a cost associated with products sourced from nature to produce a good, and then that cost would be both the direct use of natural assets, and the disrupted natural assets from that production. In this way, companies could then have a target, which might be they want to get their cost of nature sold down to zero, in the same way that with net zero you want to get your emissions down. So that's a concept, but it is very far off from happening.
And it has the added benefit of a clever acronym, CONS. So it's memorable. What do you think are some of the biggest downstream aspects here, Chris, from this focus on biodiversity? I mean, is it company valuations? Is it the future value of land? Other sort of economic metrics?
Sure, I'll give you two. I'll give you a micro and a macro one. So the micro one is more around production. I think that as ecosystem services deteriorate, companies will experience supply and production losses if they don't adapt their practices. One industry that has a lot of dependencies is obviously agriculture, dependencies on biodiversity. But there are others in staples, beverages, energy sectors as well. So production and supply are going to be a key part of evaluating biodiversity loss. That's the micro example. The macro example, I think, is land. And so if the various 30 for 30 pledges globally come to fruition, and the 30 for 30 pledges are basically saying the world needs to protect 30% of the land and water by 2030, and maybe we're at half of that today per our scientific evaluations, then real estate and land are going to have a lot more value in the future. Like if we have to double what we protect, then this is a finite supply, right? So if we take some off the market, the rest has more value. This is especially true because, as Woodwell has educated us, the goal of this is not to just circle forests that are being unused and say, hey, done, we're now protecting stuff that we already weren't touching. The goal is to go region by region, find biodiversity key dependencies, and then protect them. So if you think about just take the U.S., that would mean going through all 50 states, finding the biodiverse areas and saying these are now protected. It doesn't mean just going to the big forests and protecting those. Well, that means in all of those areas, the surrounding property values and land have to be worth more. So at a macro level, I think there could be major land implications.
So Zach, two things from your perspective. Chris mentioned the mean species abundance concept. I'm curious for your scientific perspective on that. And then, again, from your scientific perspective, what industries or geographies are most relevant?
Yeah, so I'll start with the mean species abundance. In some sense, I think Chris mentioned that it doesn't always work, and I think the reason why it doesn't always work is because not all species are created equal in an ecosystem. There's what's known as a keystone species. And what a keystone species is the most important species in that food web or that ecosystem. And without that, many other parts of the ecosystem fall apart, and you almost get a situation where there's only one species that survives, or only one or two in that whole ecosystem once the keystone species is removed from the web.
What's an example of a keystone species?
One of them is actually a good success story. I know we're talking about a lot of bleak things here, so I'll start with the success story.
Good.
Several decades ago, the North American wolf was hunted and removed from the ecosystem in Yellowstone National Park. And because of that, coyotes and deer no longer had a predator. So they began to become overpopulated. And the reason why the wolf was originally hunted is because it was obviously dangerous to that area. But as we realized that it was the keystone species, it became a protected species. And sure enough, we re-released several wolves back into the wild, and now their flourish in the ecosystem is back under control. It is a much greater carbon sink. Even waterways are starting to change path to the original place. So like I said, not all species are created equal, and you got to take into effect the native species, more importantly. We can't just take species from one ecosystem and move them to a different one. You have to understand the science behind the native species. Another really popular example takes place in the Pacific Northwest, where we had large swaths of kelp forest that just disappeared one day. And it was actually a mystery for several years until a scientist actually figured out the keystone species in that ecosystem were the otters. The otters were the natural predator to sea urchins. Without the otter in the ecosystem, sea urchins thrived and completely ate all of the kelp forest. The reason why otters disappeared from the ecosystem actually goes back to post-World War II and the whaling that took place in the Pacific Ocean. Removing the whale from that ecosystem caused the orcas to find a new predator, and they moved on to seal. And after the seal population declined, They then moved on to the next best thing, which was otters. To go to your second question, I mentioned at the beginning, but from an industry perspective, and Chris also touched on this, everything depends on biodiversity. We could go industry by industry and pick out, hey, how does biodiversity impact this industry? But you could almost do that down the line. So a couple of the locations in the world that Woodwell and scientists in general are particularly concerned about is our world's coral reefs would be a big one. Coral reefs, even though they only occupy less than 1% of the ocean, actually contain 25% of ocean biodiversity. And even just the Great Barrier Reef alone, which isn't the only one, 500 million people depend on that for food and livelihoods, such as tourism and fishing. And so coral reefs are dying quite rapidly as the oceans warm. They bleach, and only about 30% of the corals survive year to year after a bleaching event or after a warm ocean year. So it's expected that by 2050, if we continue on the trajectory we're on with global warming, the oceans will become warm enough that as much as 90% of coral reefs could be gone. And that's a huge biodiversity hit, especially in our ocean ecosystems. On land, it's very obviously the Amazon forest. We've been deforesting the Amazon for decades, if not a century or more. And as we do that, we actually negatively impact the local climate. And there's a tipping point that we're rapidly approaching called the Amazon dieback, whereas once we cross this threshold, it's almost impossible to reverse it. And it's where we deforest enough of the Amazon that the local climate has changed so much that the Amazon starts to essentially die on its own, even without us deforesting. There's some uncertainty around that, but if we hit 25% of the original forest deforested, somewhere between 25 and 40% is where that number sits in the science world.
Where are we right now?
We just hit 20% last year, and we're still deforesting about 0.2 to 0.4% of the Amazon every year. So if you play that forward, if it does happen to be on the low end of that threshold, we could be looking at an Amazon dieback situation in as little as 30 years. But it's most likely a little bit higher, but that assumes no increased deforestation. And the Amazon is by far the highest biodiversity holder in the world. It's also by far the greatest on-land carbon sink in the world. And not only that, is it keeps the tropics cooler than they would have been without it. So if you think about how warm it is already at the equator, and as climate change continues to make it warmer and warmer, you take away the Amazon and you increase the temperature around the equator about 3 or 4 degrees Celsius more. And so that would push some locations past inhabitable for humans just because it already is so hot. Those are a couple of the geographic locations that I think scientists are most focused on in the near term. But really, you can go continent by continent and find at-risk areas of major biodiversity loss in the 21st century.
And just to add, Thomas, there's an interesting intersection with finance on the coral reef side, which is sensors. So, we've been very bullish on sensors across climate change. Sensors are going to be key. So they can put sensors now to monitor the bleaching in the coral reefs, and then you have insurance policies created on the reefs because the tourism industry relies on the reefs. So this is telling you how severe the problem is, that governments are worried about the reef because of tourism, so they're taking insurance on the bleaching level at the reef. Like, this is what it's become.
So, Chris, Zach just outlined a number of important scientific principles here, from keystone species to these geographic locations. So, bringing it down to the company level, what examples are you seeing of companies beyond sensors playing here in this increased focus on biodiversity?
Sure. I think one of the key concepts at the company level is going to be this concept of a social license. So I'll give you an example. Today, companies are primarily working to minimize biodiversity loss through pollution changes, addressing overexploitation, regenerative ag, responsible sourcing, waste management, recycling. Why have they addressed these first? Likely because their connection to climate change and the company's interest in maintaining that social license, if you will, with the local community, right? So these are the most visible, easy to see and track things, and the community is concerned about them, so the companies go after them. So as an example, companies that put water and biodiversity considerations up front can support their social license with those communities that have water shortages, right, and need access to water as a resource. And so beverage companies, pretty obvious example, but they are starting to disclose when they invest in designated areas to improve the watershed health, and the residents' access to water. So those type of collaborations are going to be key. The more biodiversity risk you have, the more the companies are going to have to show what they're doing to the local community in order to maintain that. And then I'll take this in one other direction, which is where governments and policy may go. There's a very interesting read on this from Ecuador. So Ecuador is about 10% of the world's biodiversity and was the first country to recognize the rights of nature. So in 2008, they actually put this in their constitution, and it provides a framework that attempts to balance the needs of nature with the needs of society. And so this could be a blueprint. If you think back to that 30 for 30, the blueprints across the globe could also include some type of government constitution or declaration around how do we give biodiversity a, quote, right that's balanced with what the industry and society needs as well.
That's interesting that Equator
Yes.
is playing a leading role here, given the fact that it's sitting on the most exposed part of the planet in terms of climate change going forward. Zach, since science is driving this whole discussion, we're going to give you the last word here. So from your perspective, what's the number one thing you wish more people understood about biodiversity?
Biodiversity isn't just about planting trees. For decades, it's been let's plant 1 billion trees. It's about understanding, one, the native species that are supposed to be in that ecosystem, and two, it's about getting nature to work together. Just planting trees won't fix the loss of biodiversity that we've already seen. It's not as simple as that. It takes a knowledgeable science approach, understanding what should be in this ecosystem, and also understanding what are the important features of this ecosystem, what can allow the ecosystem to work with us to recover the biodiversity that we've lost over the past many decades. And that means it's doubly important to understand the connection between the finance world and science or biodiversity world because they're all interconnected.
Let me just say thank you for the science here. It's really helping us at Wellington understand this process, really from the most important variable. So thank you for that. So Zach Zobel from Woodwell Climate Research Center and Chris Goolgasian, thanks as ever for doing what you do at Wellington on this topic of biodiversity and climate change in general. And thanks both for being here.
Thank you, Thomas. Always a pleasure.
Thanks for having me.
The WellSaid podcast is produced by Wellington Management. The executive producer is Kristen Ganong. Our senior producers are Mark Murphy, Dana Wickstead, and Colin Hopkins. Our sound engineer is Mark Murphy. This episode is mixed and edited by Mark Murphy. You can find this episode, as well as others, in Apple Podcasts, Spotify, or wherever you get your podcasts.
All investing involves risk, including potential loss of principal. Past results are not a reliable indicator of future results. Forward-looking statements should not be considered as guarantees or predictions of future events. This material was current as of the publication date. Wellington assumes no duty to update the content in the event that the information changes. This commentary is provided for informational purposes only. It is not research that is required to be prepared in accordance with legal requirements designed to promote the independence of investment research, and it is not subject to any prohibition on dealing ahead of the dissemination of investment research. It should not be viewed as a current or past recommendation and is not intended to constitute investment advice or an offer to sell or the solicitation of an offer to purchase any securities. It does not take into account the investment objectives, financial situation, or needs of any particular person. Wellington Management does not provide legal, tax, or accounting advice. The views expressed are those of the speaker and may not reflect the views of others at Wellington. This recording may not be reproduced or distributed in whole or in part for any purpose without the express written consent of Wellington Management. Please refer to the disclosure section of this podcast for complete details.